This afternoon, I'm pleased to introduce our guest, Colin Coleman. Colin is, as the brochure says, the head of investment banking for Goldman Sachs for Sub-Saharan Africa. You won't be surprised that previously he also worked for some other banks, JP Morgan and Standard Bank. What you might be surprised to learn is that before banking, he actually had a quite active career or life in the political world in South Africa. And he was South Africa's first he was the executive director for the consultative business movement, served in working groups of multi-party talks, facilitated the International Mediation Forum, helped negotiate agreements to facilitate all parties' participation in South Africa's 1994 elections. So in addition to being a banker, he's also an astute observer and a participant in South African politics. He's going to talk to us today about a number of things in the current environment, and perhaps we might also ask him some questions about his work in bringing capital into Africa from China and elsewhere. So with that, welcome to Colin, and I'll join him on the stage, although you have to do all the work in asking the questions. Colin, all yours.
Well, it's wonderful to be here. It's very wonderful to have a cup of coffee in my hand. I think it's Kenyan coffee, by the way, because it's really good. And it's needed because I've had quite a week, Peter. It's been a week in which it started with a trip from Johannesburg to London with Finance Minister Pravin Gordhan, five of us from business, trade union people, basically speaking to over 100 investors in London, Boston, New York, and given my commitment, I came back a little bit early to speak to you. But we had a very interesting week speaking to investors, speaking to the rating agencies, you know, those people who are rather influential these days. And given South Africa's credit rating is one notch away from junk status in Standard & Poor's, what they do in the next few months is very critical to the cost of capital, to the exchange rate, knock-on effects on inflation and growth. And so we're at a pretty important inflection point. Anyway, I'll leave that subject perhaps for question time. What I thought I would do, and it's very good to be with you, and I wish you really well with this conference, is give you a sort of overview, although I know you've had much input, but from where I sit in my role as partner in charge of the Sub-Saharan Africa region, and really the only partner who's paying dedicated attention to the Africa space, of how do we see it. And I was actually at Wharton, Yale, and Harvard. Sorry to say I've shared with the competition. I never knew universities were as competitive as they are. There you go. But I went and I gave a similar talk, and what I found there was it was actually better to allow question and answers because it gets to be a very dynamic dialogue. But the key theme of the talks I gave, and effectively what I want to talk to you about today, is the question which is on everybody's minds at the moment, whether you're private equity, sovereign wealth funds, multinationals, banks, and governments, and those interested in the future of Africa is Africa rising or is Africa uprising? And I'll give you both of those narratives because there's an interplay between those narratives. And obviously I know where we would all like the answer to be because we want the best for Africa and we want Africa to rise. But there are important events at play in the world and in Africa and in the most important countries in Africa, which begs the question, how long will it take for Africa to rise? And at what point in your career lifespan, should this really lift off, so to speak? And Goldman Sachs, by the way, is really a firm that can only rise as fast as GDP rises or falls in the world. We can't make GDP. We can only respond to GDP. And so we were just talking, roughly speaking, Africa is 15% of the world's population, rising to probably 20% of the world's population. it's only really 2% of the world's GDP. And we were talking, and so you were saying, Peter, that roughly 2.5% of your students have historically been from Africa, and it's now 9%, which is a great achievement. And obviously, you know, Peter's ambition to grow the African contribution is ahead of its time. And the question is, so when is Goldman Sachs revenue, 10% of Goldman Sachs' revenue, going to come from Africa? You know, if you really get down to it, where right now it's probably more like 1%. So I'm like the chief of a village that's called Africa. And we have lots of chiefs of villages that all combine to form the federation, which is Goldman Sachs, and make the contribution. But I want to be a big chief. I don't want to be a little chief. So you know, really we are all sort of vested in trying to get the growth of Africa moving. But let me just start at the beginning of saying, you know, it's really interesting when you think about the world today. There's two basic, you know, tectonic plates in the world. The tectonic plate one is the United States. And what we are seeing is, you know, unemployment in the United States, you know, at very low levels, 4.9%. And, you know, at some point, inflation is going to start in the United States, and you're going to have GDP growth pushing interest rates in the United States up. And that is going to mean for emerging markets a long trending process of you know, the risk-weighted returns on the developed market assets, particularly in the United States, being more attractive, and that's going to make investing in emerging markets more difficult, more challenging for very big institutions. You know, when you see a BlackRock, there's $4 trillion, even Goldman Sachs has $1.1 trillion of assets under management. These are very large asset pools, and the force of the movement of assets can be quite brutal. So what happens in the United States is going to be very relevant. At the same time, the other tectonic plate is really China. And China has been, you know, growing at enormous pace. And obviously the extent of the slowdown in China is the big debate. Is China going to have a softer or harder landing? We've always in Goldman Sachs been more on the soft landing side. But there are important areas of indigestion in China. They don't have bankruptcy laws to help failed firms work out the system. So there's pressure on the credit environment in China. The total information flows in China are very challenging. So really working out a precise picture of what is the real information around economic trends in China means we don't actually have a very good sense of, is the forecast of Goldman Sachs of 6.8% growth of a $10.5 trillion economy this year correct, or is the real economic activity indicators, which is what we see from a bottom-up point of view, more like 4.5%, 5%, where it really is, and it makes a tremendous difference whether China is growing at 4.5% or 6.8% to the world, because the knock-on impacts on commodity prices are going to be long trending. And so just think of this, you know, can we have a world where China is effectively growing at, you know, around 5%, and the United States, which is a slow growth environment for them, and the United States continues to do well, you know, and grow at above 2.5% type growth rates? Or is the world so connected? And the answer, I think, is that there is an argument that the United States is reasonably disconnected because it's not much of an export economy. It's a very big independent economy in many respects from those forces. Not to say that what happens in China won't affect things, but the degree of infection is what's at risk. So what does this mean? This means that there is the potential for a world where the United States is, you know, effectively heating up the economy in the United States as the world's largest economy, doing quite well, and interest rates start to move up in the United States, and at the same time a slower China that may actually be grinding down harder than we would have expected. And the knock-on impacts of that on commodities would be quite severe. What does that mean for Africa? That means that you get a longer trending, lower for longer commodity price environment, and you get the vacuum sound of emerging market funds moving to the high-yielding, safer United States environment. Very tough world for emerging markets as an asset class. Brazil, having a really tough time, partly self-inflicted, partly global. But that's the case with South Africa, partly self-inflicted, partly global. You've got the same process happening in Russia and in Turkey for different reasons, very difficult environments for those economies. And so what you have is an emerging market challenged environment that translates in Africa into very challenging local conditions. So let me just say that is a sort of macro overlay. Now, let me just switch gears into the Africa Rising debate. So the Africa Rising narrative, there is no question, Peter was saying this university is 800 years old. Whether this happens in the next 5 years or 10 years or 20 years is nothing in the history of this university. It's going to happen, which is you've got, 15% of the world's population, currently, over 1 billion people, growing at much faster population growth rates than other places, with an enormously underserviced emerging middle class that needs banks, that needs telecom, that needs consumer, that needs retail, that needs property, that needs infrastructure, all of this which is going to be a pent-up supply of these goods and services into these economies, which is has a huge investment ticket associated with all of that process. You've got sovereign wealth funds, private equity, important companies, and then you've got important countries we'll come back to in a second, who are all mobilizing around this. And you've got democratization in most African economies. I got quite exercised, by the way, I just wanted to say this publicly. I got quite exercised about the Uganda election. I think that was a really tragic moment for Africa as a whole, that the Ugandan president stands again after several times in office, that there was significant violence in that election and significant questions over that election result. That is not a narrative that has its place in Africa right now. And I wanted to stand up against it because I think, that is a shame on Africa and its narrative. We've had such a success in the democratization narrative around Africa, and you cannot but stand up and say, in Nigeria's case, well done to the Nigerian people for electing a new president peacefully when everybody expected bloodshed. I was in Nigeria 3 weeks before that election, and there was hardly a Nigerian business leader who was not going to be in London at the time of the election, because everyone expected a conflict that was going to explode in Nigeria, and yet Nigeria got through that peacefully. What President Buhari has done with his election and his administration is somewhat frustrating, because he's taken very long to put in place an administration, and there's widespread paralysis and a dysfunctional economic and fiscal environment at this point in time. But we'll come back to that. But that democratization narrative really holds in most places in Africa. And because of that, the population explosion, the fact that you've got this mobilization of people, capital, expertise, countries, and so on. And there's is a really long-range opportunity in which we should see, more students from Oxford who are African. We should see more GDP from Africa. We should see more revenue contribution in Goldman Sachs from Africa. Everywhere people touch. And this is why last April we had Lloyd Blankfein in Africa. This is why last week Jeff Immelt from GE was in Johannesburg in Africa, committing to growing his business. This is why we've seen significant growth in private equity assets in Africa. And so we could talk a lot about it, but I just want to really press home that this is not a story that is about to stop. This is a long-range development, and the question is how seamless and how quick and accelerated is the development going to be. Now, China, just for 1 second on China. I was instrumental in the ICBC Standard Bank transaction. The reason I saw that transaction was that, or saw that coming, was that in 2006, if you remember in October, basically the then president of China called African countries to a summit. And 53 of 54 countries, presidents, pitched up in Beijing. And I thought, wow, this is an amazing event. In 2006, what does this mean? It's not for fun. So the Chinese have a plan. I better get to China and understand what that plan is. So in 2007, in February, I went to China, and we had widespread conversations with the Chinese corporates and banks about who was interested in what was going on. All of them were. I went back to the hosting of the African Development Bank meeting, which was in April in Beijing. It was in Shanghai that year. And I went back and I spoke at the conference of the African Development Bank in Shanghai, which told me something as well. And basically within a few days of that visit, a number of CEOs asked me to go and see them in China, and one of them was the ICBC chairman, Zhang, from ICBC, and I invited him to come to Johannesburg in June, which he did, and we introduced him to two bank CEOs to talk about the possibility of a transaction with him for him to buy into those banks. And that then led to conversation with Standard Bank. Standard Bank by September went on a reverse trip to Beijing, which we facilitated. And by October, we announced the transaction, which was $5.5 billion investment by ICBC in Standard Bank as its vehicle for playing the African growth story. Now, it's a lesson in that because there was no suggestion about the fact that there might be such a transaction. It was the largest transaction at that time ever to come out of China, offshore investment. And obviously it was closed really months before the global financial crisis. So June 2008, onwards, the events sort of unfolded, but we had closed the transaction in February that year, and it was critical for Standard Bank to get that capital because it was primary and secondary shares in Standard Bank. But really, as young people, what I always say that what you're really looking for in leadership, and you're looking for in bankers, and you're looking for in business people, is that entrepreneurial vision of saying, you know what, I see something coming, let's go and test the art of the possible and try and make something happen that's not in the air. You have to go and craft something. So I just use that as an example. But since then, we've done Jinchuan Meteorix, we've done discovery investing in a partnership with Ping An, we've done a whole bunch of other things around the China-Africa debate, and I've been in China maybe 12 times in the intervening period. President Xi was in South Africa on the Africa-China summit for 4 days, which I understand from Peter is the same amount of time that he spent in the UK. So if that gives you an idea of how important recently it is to the president of China to be in Africa and spend that time, I think it says to you that China is going to be a long-range partner of Africa. Now, that we can talk about the benefits, the pros and cons of it, because I know every one of you has a whole bunch of questions about is that good or bad for Africa, and so on and so forth. My own personal bias is that it's very good for Africa, but Africa needs to take control of the agenda and craft the agenda and use it to their benefit and express their vested interests in the unfolding discussions with China. We can spend lots of time on that. But I think the bottom line is we, in our lifetimes as Africans, should expect China to be a long-range partner. And if I could suggest one thing, as part of an African school, you all learn Mandarin, because Mandarin is what I tell my children, and they don't listen to their father. So my one child learned Mandarin for 2 years and gave it up, but I'm sure she's going to go back to it in the future. But learning Mandarin is going to be so important to doing business in Africa in the future. And I think for anybody, frankly, knowing Mandarin is a major plus in your careers going forward. So let me pause there. The African rising narrative is a very long-range systemic issue. The Africa uprising narrative is an interesting one because right now there is a whole bunch of indigestion that goes back to that macro picture that I explained of a China that's slowing down and a US that is getting stronger, and that being very, very difficult for Africa. And what is this meaning? You know, we did the Angola sovereign bond, inaugural sovereign bond, in November, December last year. We raised $1.5 billion. It was 4 times oversubscribed. We priced the coupon on the bond 50 basis points tighter than we had indicated at the start of the bond roadshow, because there was significant demand, and notwithstanding the issues around oil, which was in the market already, Angola had been very seized with dealing with the budgetary consequences of a lower oil price very quickly, and they were very smart about it. But the oil environment is very important for many of the big countries. When I say the big countries, I'm really talking South Africa, which is really a more commodity country than an oil economy. It's an oil importer. Angola, Nigeria, and Kenya, and then Egypt. Those are, in my mind, the bigger countries in Africa. And many of the other countries are really, really economic provinces. I know this is going to upset every one of you. But whether you're from Botswana or Zimbabwe or those places are really kind of interplaying with the lead role of South Africa in that particular part. Angola is its own economic zone. Nigeria really dictates what really is happening around the West Africa environment. Kenya is critical to what happens around Tanzania, Uganda, Rwanda, even into Mozambique. That whole aspect. And Egypt is instrumental in the North Africa environment, including Morocco and other places. So I would say when you really think about these countries, Angola is going through, I would just paint it quickly for you, a tough environment, independent of that Dos Santos family general superstructure that oversees, the government. But the government is actually quite well run, but they have a very tough economic environment as a result. And I hear, very significant stress that's getting fed into the population lower down. Nigeria, as I said, just speaking to corporates like ShopRite and Standard Bank and MTN and others that are active in the Nigerian environment, basically, we know from Goldman Sachs the convertibility risk of the currency is immense. Getting money in and out of the country is difficult. Having proper liquidity and being able to deal with a currency that is basically half in the formal market what it is in the black market. So the black market is around 400 naira. The formal exchange rate is 200, 198 or whatever it is, to the dollar. So you've got this huge dislocation, by the way, which means effectively, in practice, Nigeria is not the largest economy anymore in Africa. South Africa is once again the largest economy because you have to halve the GDP number in Nigeria into dollars, and what we look at is the dollarized number of these economies. This is not to say that Nigeria won't at some point again be the fastest and the biggest rising economy in Africa. It will be, and that's for that reason that I've spent a huge amount of my time. But the indigestion of having an administration that is really somewhat paralyzed, getting things through the ports, very difficult, getting goods into the country, very difficult, money in, money out, very difficult, and a growing difficulty in the regulatory relationships in Nigeria makes things tough. Okay? Egypt, which has been doing quite well on the economic front, opening the new Suez Canal project and so on, but at the same time what you're seeing is overreaching on the political side and a growing conflict which is not helped by the fact that, for example, former President Morsi was effectively put into jail on a life imprisonment charge, but effectively the government wants to hang President Morsi and is, effectively looking for a conviction that he'll get the death sentence in Egypt. It's very inflammatory to the politics of Egypt, and so you see, what's going on there. It's not cooling the environment. What we would want to look for is we want to look for a cooling of the economic and political atmosphere in order to get support to go and do more investments. Notwithstanding that, we have managed to IPO a company called Edatar in Egypt. I think Morocco is quite an interesting place. It's quite stable. The kingdom there has done a good job, and it seems that Morocco is a small but growing sort of force in the region. Kenya, Tanzania, Uganda, Mozambique has a very interesting development around the oil and gas side, which is, effectively the gas find in Mozambique will have a potential $50 billion expenditure in an economy that's only about $10 billion in size. And they have a budget of $4 billion in Mozambique. That's a complete revolution in a Mozambique economy that has high potential, but the capacity constraints in the government for managing the project have meant it's taken longer. We've hit the oil price problem. So the commitment of the dollars to invest in Mozambique is probably some way off as a consequence, because the major oil companies, Anadarko and ENI, are likely to slow down the rollout of that project, which is a difficulty. And then you've got all the Kenya, Uganda relationships around the oil and gas pipeline, who's going to get the benefit of the infrastructure going through their economy out to the ocean to get the oil out to China. And basically, they are insisting that there'll be a refinery in the region, which is not economical, and it doesn't make any economic sense. So the Chinese won't build the pipeline on that basis, and if they don't build the pipeline, you won't get the oil out. So even though you've got a great oil find, it means nothing until you've got an infrastructure package to make it work. Kenya, I've got to say, has always worried me in respect of the total governance of that country and the ability to separate out the economics of the private sector and the politics of the government. It seems to be much more tied in. In Nigeria, we've done lots of transactions with the private sector. It's never touched government, ordinary regulatory issues, but there's never been any suggestion that politicians in Nigeria need to get involved in bond issues of banks, for example. And so I think Kenya has some progress to make in respect of managing the political environment and managing corruption in that country. And that gives a lot of indigestion in that respect. And I think many of these other countries are not dissimilar. Tanzania and others are making, with their new president, some great sounds, that we have to see how the capacity constraints work. So I would say, in respect of the Africa Uprising narrative, and we haven't really talked about South Africa, but I've hinted at the fact that South Africa is going through a very difficult moment of fending off the rating agencies, President Zuma's leadership, and the issues surrounding governance and institutional credibility and integrity, which are not reminders of the Mandela era in South Africa and are causing a lot of pain in the society. So I would say right across the piece, each of these big countries are going through some very, difficult digestion problems. But I come back to it and I'd say, Peter, and then I'm going to stop, is that the Africa Rising narrative will win. But it's going to win only when two things happen. One, these countries manage to deal with their own specific challenges, and we've identified what they are, and that's through the hard work of the people and the governments of those countries individually, and when the global conditions ease, so that we can get a more normal narrative, but this is going to be a cycle that may take years. So in that respect, I think, countries all have what they don't control, and they all have what they can control. So they need to attend to what they can control and hope to guide the world into a better place and wait for that environment. Last point is, so if you're thinking here as doing an MBA or doing whatever you're doing about the Africa opportunity, I would say in your lifetimes, not necessarily in mine, this story is going to reach a crescendo. It's not there yet. We've been ramping up. Last year, Goldman Sachs' revenues in the region were as big outside of South Africa as they were inside South Africa. I think, frankly, this year is not going to be as positive a contribution from outside South Africa to the regional revenues. But we're building a portfolio of client prospects, of opportunities in the advisory and the financing world. And I do think that over time, it'll be a big story for the world and for Goldman Sachs. So I'll leave it there.
Thank you so much, Colin. So Colin has shared with us a wide-ranging point of view about, probably I counted 15, 20 different countries that you mentioned by name, the economies, various deals, politics, and more. It's now your turn. So we have about 10 minutes for questions, and we'll start with, this gentleman in the middle, right? Actually, over there, kind of straight up the middle here, please.
Why don't we take like 3 questions?
Okay, we can do that.
Hi, my name is Alakiwa. I'm the CEO of A Experience Abroad. You mentioned about the US having about 4.9% unemployment, and I understand that's just for the economically active. I know that here in the UK we've got about 5.1% unemployment in the economically active and about 21.7% economically inactive. So I just wanted to ask, how is Goldman Sachs then addressing investment to companies that address the offer employment to the economically inactive?
And I think what we'll do is we'll take 2 or 3 questions, and then Colin will answer a bunch of them. So if there's another mic, okay, there's one right there, and then maybe the woman up there for the 3rd question, and then Colin will answer that portfolio questions.
Hi, Colin. Marco Fisser from, I'm doing my executive MBA here at Oxford, and I work in private equity in London. You mentioned briefly about the political situation, particularly in South Africa, and I just was wondering, in your mind, to what degree does the financial climate, is it dictated by the political climate within South Africa?
Okay, and then the 3rd question.
Hi, I'm Leander from Leapfrog Investments, and you touched on the currency decline in Africa, and my question is, to what extent do you think it's cyclical and that we're just going through another trough? Because we know that currencies go through peaks and troughs, and whilst I'd like to be as optimistic as you've been, you see companies such as Barclays leaving Africa, and you wonder whether it's because they think that this trough is going to be extended and it's not really a trough, but it's actually a decline that's related to your uprising that you were mentioning. Or is it just, I'm just curious to know what your opinion is on where you see the currencies going.
Okay, so let me deal with the 3 questions of investing in inequality and the unemployed, and how does that get going, the South Africa question, and the last one. So I think it's a good question. I think the difficulty with the Volcker rule, okay, in the United States is what it has done is it's made it more difficult for the banking industry to invest as a principal and to mobilize principal sources of funding. Having said that, Goldman Sachs does invest in companies. We've just invested in a small African company. We're invested in a, I don't know if you saw that, that we just invested, I'm not sure exactly the number, but somewhere around $50 million or so in a company in the mobile space. We've invested in a range of other companies, MTN Nigeria, IHS, a bunch of them. These are obviously not startups, but they are companies that are early on in their development, and we see it as an opportunity to play the growth companies, so to speak. Venture capital there's quite a big shortage of venture capital, which is really what would tap into what you're suggesting. There are certain entrepreneurs, wealthy families, private equity people that are more attuned to investing in that. Mark Shuttleworth has a venture capital fund, for example. And I'm sure you've talked about it in your, I saw some other private equity people on the program, so I'm sure you've talked about that. But generally speaking, the question of how small businesses are supported is it's a big debate. We have something called 10,000 small businesses, and we had something called 10,000 women, which was effectively putting small business owners through crash courses of how to facilitate management and then mentoring and connecting them with funders. So there are various ways in which Goldman Sachs is attending to that, but it's a big question with a small answer. If you understand, I think it's probably something that the likes of Oxford need to spend more time thinking and contributing towards the intellectual thought of how do we actually see it as an opportunity as well. And I was saying to Peter earlier that I believe that the whole issue of SOEs in Africa is going to get displaced by technology discoveries and innovation, like the mobile payment systems, battery generators instead of diesel-fired power in every building in Lagos. Why don't we have battery-fired power capacity? And we'll see solar. Africa is a fantastic place for solar energy, and so on and so forth. So I think the mix of energy, the mix of telecommunications is going to be very technology-driven, which also will create opportunities there. On the South Africa piece, absolutely, your question is, will the politics infect the economic environment? Absolutely, it will. I mean, the current reality is the political environment, particularly around December and the appointment of the finance minister, really made South Africa's risk premium go significantly higher. The currency dropped significantly. That caused inflation in the economy. It's a very difficult sort of environment. And what we've done, and part of this roadshow that I was on this week with trade unions and business and government, is to rally behind the government in our own vested interest to help create a much better environment for businesses to work towards a social compact that will effectively deliver some answers on labor, some answers on SOEs, some answers on the critical issues of mining and legislation and stabilizing the economy and attracting tourism and all the things that will effectively take what is a sub 1% growth rate more back to the 3.2% average growth rate. So really working together in partnership between government, business and labor is going to be the source of inspiring a different growth narrative in South Africa. The last question, I'm just trying to remember what specifically about? The Barclays issue. So I mean, look, as I say, there's tectonic plates of these economies which reflect in the currencies and the strength of the United States dollar, which is absolutely overwhelming in the emerging market currencies at this point in time. But I would say in respect of Barclays, firstly, just to tell you what I can, because I can't really talk about the detail, but I can talk to you about the high-level issue. The high-level issue is Barclays is divesting, the group has said they're divesting from Barclays Africa, not because of Barclays Africa, but because of the group capital issues and the overall regulatory issues on Barclays, which means they have to effectively raise capital and shed some business. And this is the one that they chose to shed instead of shedding the United States investment bank business. And that was a sort of high-level decision, which has very little to do with the Africa uprising narrative. I think it's got to do with Barclays' own issues. But definitely this is going to be cyclical. It won't stay like this forever. There'll be balance that will come back. But really, bottom line, the African countries need to take care of what they can control. Their own fiscal and monetary policies is what is critical. And in Nigeria, for instance, there is no sustainable path for the current policy of the current monetary policy, and at some point they will have to move on a floating currency. And we did some research for South Africa, which demonstrated to me as a student, having done that research, that floating currencies are very powerful shock absorbers of structural changes in economies. And those currencies that don't float effectively will blow up at some point because you don't allow for structural changes that come into play.
So the organizers here, we are currently out of time, but we've started a bit late. So if it's okay with everybody, we'll take a couple more questions, 3 more questions, and perhaps starting with the woman right here. And then number 2 and 3, 2 and 3.
My name is Terhas, and I'm a former Oxford. I'm not doing an MBA, but I still work in Africa, but I'm based in the UK. My question is, you mentioned different countries, and I can understand you avoiding the Horn of Africa, but you didn't say anything about Zimbabwe. And those countries
Are you getting me going?
that are facing problems of devaluation, do you advise that they do the same as what Mugabe did, one? And second, as a banker, what do you advise, or what would be your advice to countries, African countries that have serious forex problems? I come from a business background. For the last 5 years, our factories had been closed because the government had a serious forex problem. So what is the solution? Because you go to IFC, you go to World Bank, it's the same story.
Okay. Question 1. Question 2 is right there. Nadja? Yeah. Yeah, right there. No, one up.
You spoke about the intersection of government, business, and labor, and just trying to understand where civil society organizations come into play, especially given that a lot of European governments, previously funded, and global governments are now focused on attention on migrant crises and other parts of the world. Where is HIV, AIDS being addressed, maternal mortality, and how does business have a role to play in helping the governments address these issues?
Okay, and then number 3. Gentleman up there on the other side. Yeah, please.
So infrastructure is a very powerful socioeconomic catalyst. AFDB cites spending in Africa at 70 billion per annum, but the needs actually total to 150 billion. So that investment gap can't be filled by governments alone, nor DFIs. Banks have traditionally played the main project lender role, but just like in the case of Barclays, due to macro regulatory changes, they're increasingly less able to play that financing role. So for institutional investment, where you cited numbers, BlackRock, Goldman, in the trillions of dollars, how can you connect those enormous pools of capital to this enormous investment need, given that infrastructure produces long-term inflation-adjusted yields?
3 small questions.
Please, just I just would like to ask, Colin. You said something that I think is really critical to whether Africa does eventually get to rise or not, and you said that you didn't think it makes sense for an oil refinery to be built in Kenya or Uganda, that it should be built somewhere. But if we look at the whole issue of beneficiation being one of the issues that Africa has, that would enable us not to just ship out our raw materials, but be able to earn money and be able to sell value-added products, why do you say that it doesn't make sense in Kenya or Uganda? Why should it be elsewhere? Thank you.
Okay.
I'm going to, if I can, Peter, I'll go in reverse order because it's easier to remember. So on the refineries, I mean, you know, the economics, the maths of a refinery, I think around 250,000 barrels of oil a day don't make sense. There's no basis upon which the production in that region alone can support a refinery. So that then that then raises the question, well, what about other oil refining out of the broader region capacity? Can we mobilize that into a refinery in East Africa? So that then gets to, well, do you know what? South Africa wants to build a refinery. You know what? Angola wants to build a refinery. Well, Nigeria wants to build a refinery. Mozambique wants to build a refinery. Because every single African country wants to build a refinery. None of them make sense alone. So that means those African countries have to coordinate and cooperate. But you succeed with getting any one of those countries saying, okay, well, we'll give up on ours so that you can have yours. So what is the deal? What is the negotiated transaction? So that's where the likes of the African Development Bank and these regional bodies and so on really have to come into play. But they're very institutionally weak. And I just don't think South Africa's institutions at this point in time are going to get it right, if I put it that way, to allow for that debate to end up with, you know what, we as Sub-Saharan Africa are going to center our refining capacity there so that it can be 1 million or 2 million barrels of oil a day refining capacity. And the Chinese will say, great, we'll build it for you and we'll have our pipeline out of there. That's fine. But they're not going to do it for something that's unworkable. So in the end, what happens is Uganda or whoever have this high public expectation that, oh, they're going to get a refinery because the government says so. But nobody can agree on it, so nothing happens, and in fact, not even the oil is developed. And so everybody loses. So we need to be far more smart about, what is the true reality around the economics of refineries and who's going to get it and how we're going to get it to work. On the infrastructure game, that is a global phenomenon, as you put it, that banks' credit capacities effectively are reducing, particularly the European banks, have to reduce their credit intensity and their assets. So effectively, in order to get back to capital ratios that make sense, they're selling assets. They're not bringing assets onto their balance sheets. So particularly the European banks who have not taken the pain, like the United States took the pain around the global financial crisis, those banks are much better positioned. And what this means is there's much less capacity. Having said that, the indigenous African savings is actually quite significant. So whether it's the likes of the PIC or the institutions in the economies of Africa, not just South Africa, that have significant savings, there's the big potential to mobilize those savings more effectively for long-term infrastructure investing, which, as you say, has this annuity-style returns, which suit the liabilities of the institutions making those loans. So I think we should be able to work our way through that with a smart approach. And the African Development Bank is one institution that's helpful. The IFC is actually very active on the continent. And then the other banks like Standard Chartered and Barclays Africa, and Citibank and HSBC and others that are active in the lending space, should continue to do that. Nadia, on your question on civil society, the ultimate arbiter of civil society is the voting process. Obviously, people often think of civil society as some nebulous sort of religious organization, almost like a church-going organization of some form that mobilizes from time to time and sort of talks on the side. Well, actually, civil society ultimately are the voters. And you've seen the force of Trump in the United States. So why is it that, the populations of our countries are relatively slow to react to unacceptable behaviors across the continent? We have to be much more front-footed. And so I think cooperating with organized civil society is important, but actually civil society needs to organize itself and be very active and have a loud voice. And then, look at the students, the Fees Must Fall campaign in South Africa. Within weeks, they effectively got the president to concede to their basic demand, which was that they're not going to put up the fees, and they had to find significant amounts of capital to do that. The last question, you reminded me, and thanks for doing that, about Ethiopia. I think Ethiopia is an African rising story. Okay, I've met with the Prime Minister of Ethiopia. I've been there 3 times. It's a difficult country to navigate, but actually they're a society to study, because they have a very specific approach to their growth plan that is quite unique, quite homegrown, quite thoughtful. You know, they're doing this industrial parks, they're building infrastructure, they don't want to privatize their cash cows, telecommunications. They don't want to allow the global banking system to infect the local banking system, so they want to keep the local banking system. I don't agree with everything they're doing, but they're very thoughtful and very disciplined about what they are doing. And I would bet on that society. I think they're going to do great work, and I've been very impressed with them. Zimbabwe, on the other hand, how long do you want me to talk? I'll give you the 1 second version. Is Robert Mugabe has been a tragic story, because as a liberator turned oppressor, he has destroyed what was a very vibrant economy, and one that until he is long gone, I personally will not touch, and Goldman Sachs will not touch.
Well, Colin, thank you so much for your insights, but also for your insights and for your candor. You know, it's important when we bring guests in that, you know, that they actually speak frankly to us, and I think you've done that in a really positive way. So thank you so much.
Thanks very much. Good luck.